Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Golub Capital BDC Inc. quarterly report. Golub Capital BDC Inc. GBDC is a business development company that provides various financial services to middle-market companies in the United States. The company's investment portfolio includes debt and minority equity investments in diverse industries such as consumer services, automobiles, healthcare technology, insurance, and IT services. Some of the specific businesses and services provided by GBDC include diversified consumer services, automobiles, healthcare technology, insurance, healthcare equipment, and supplies hotels, restaurants, and leisure healthcare providers and services. It services specialty retail. GBDC also invests in various types of loans, including first lien traditional senior debt, first lien one-stop junior debt, and equity senior secured one-stop unitranche, second lien, subordinated mezzanine loans warrants. Golub Capital BDC, Inc.'s stock price has dropped significantly over the past year, reaching a 52-week low of $12.68 in February 2026. The company's financial results for fiscal Q1 2026 were disappointing, with earnings per share, EPS, missing analyst estimates by a wide margin. This was compounded by a reduction in the quarterly dividend from $0.39 to $0.33 per share, attributed to challenging market conditions and evolving interest rates. The stock also faced pressure from institutional selling, with one financial services firm reportedly reducing its stake significantly. Additionally, investors reassessed valuations within the business development company, BDC sector, contributing to a decline in Golub Capital BDC shares by 2.54% on February 2, 2026. These events collectively contributed to the stock's significant drop of approximately 16.75% over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of various financial metrics. Net realized gain/loss on investments had a significant impact in 2025, with a net loss of $2,718 compared to a net gain of $25,356 in 2024. Additionally, proceeds from principal payments and sales of portfolio investments decreased by $147,228 in 2025. Interest income also played a role, increasing by $289 in 2025. Discount amortization and PIK interest saw increases as well, with the latter rising by $3,503. Fee income was another significant factor, although it declined by $23,971 in 2025. Dividend income on equity securities remained relatively stable, with a slight decrease of $230. The fluctuations in these financial metrics highlight the importance of monitoring and analyzing revenue growth or decline drivers to make informed business decisions. The company's financial performance indicates a positive trend in its cash flow generation. According to the provided information, the company generated a net cash provided by operating activities of $212,007,000 for the 3 months ended December 31, 2025. This significant amount confirms that the company is indeed generating positive operating cash flow. The consistency of this figure across different sources further reinforces this conclusion, as both page 11 and page 208 report the same amount. The performance of various regions can be analyzed based on their amortized cost and fair value trends from December to September. On a positive note, the United States and Southeast regions demonstrated growth in both metrics, indicating strong financial health. In contrast, several European countries struggled during this period. Finland, Germany, Jersey, Australia, Sweden, France, and Israel all experienced a 0.1% decrease in amortized cost and fair value. This decline suggests that these regions may be facing economic challenges or market fluctuations. Additionally, while the Netherlands, Denmark, and Luxembourg showed an increase in fair value of 0.1%, this growth fell short of the target of 0.2%. These countries' performance was somewhat mixed, indicating areas for improvement in their financial management. Management is optimistic about the company's outlook, citing a positive liquidity position with a net increase in cash and cash equivalents. The company intends to maintain a strong balance sheet and manage debt levels effectively. It aims to continue targeting a GAAP debt-to-equity ratio between 0.85x to 1.25x and will repurchase up to $150 million of its outstanding common stock at prices below the net asset value, NAV per share. The company's investment strategy remains focused on senior secured loans, one-stop loans, and other senior secured investments in U.S. middle-market companies. It will selectively invest in second lien and subordinated loans, as well as warrants and minority equity securities. Management believes that this approach will enable the company to achieve its investment objective by accessing established loan origination channels and partnering with experienced private equity firms. Management also highlighted the importance of disciplined underwriting standards in maintaining a strong portfolio. The company's loan portfolio is partially insulated from a drop in floating interest rates due to an interest rate floor, but income yields on senior secured and one-stop loans decreased due to declining interest base rates. Despite this, management remains confident that the company has sufficient assets and liquidity to cover future obligations. In terms of risk management, the company regularly assesses the risk profile of its investments using a proprietary rating system. Loans rated 1 are considered to be at high risk of not being repaid in full, which will result in a reduction of fair market value accordingly. Overall, management's statements suggest that the company is well-positioned for future growth and is committed to maintaining a strong balance sheet and managing debt levels effectively. The company's financial activities have been transparent in terms of dividend payments and share buybacks. On multiple occasions, it is stated that the company has indeed paid dividends to its shareholders. This is evident from the mention of dividend distributions on page 216 and the confirmation of dividends declared, yes, and cash distribution made, yes, on page 192. Furthermore, the company has also been involved in share buybacks through a dividend reinvestment plan, as mentioned on page 216. This indicates that the company is committed to returning value to its shareholders, while also maintaining control over its capital structure. Overall, the company's actions demonstrate a clear commitment to rewarding its investors and managing its finances effectively. Concerns about inventory buildup or supply chain disruption are evident in various sectors. The investment trends on pages 161 and 162 indicate a shift away from containers and packaging, which could lead to potential stockpiling issues. Furthermore, the decrease in transportation infrastructure spending may also contribute to supply chain disruptions. The turmoil in Ukraine, Russia, and the Middle East, page 194, poses an additional risk of supply chain disruption. This geopolitical instability can impact the flow of goods and materials, exacerbating existing concerns about inventory buildup and supply chain resilience. That concludes the financial summary for Golub Capital BDC, Inc. Feel free to comment below, and I will be happy to answer them when possible.